All right, let's get into it. Today, we're going to break down one of the most common tools in trading, the Average Directional Index, or ADX. Now, you've probably seen it on your charts, but let's be honest, a lot of traders really struggle to make it work. Well, today, we're going to fix that.
So I gotta ask you something right off the bat because it gets right to the point. What if the way you learned to use the ADX, the way most people use it, is the very reason it's feeling you? Okay, so here it is, the big trap. And pretty much everyone falls for it. They see that ADX line tick up past a certain number, and boom, they're in a trade. But here's the problem. The ADX is a lagging indicator. It's telling you about the party that just ended, not the one that's about to start. Using it as a go button is literally like trying to drive forward while only looking in your rearview mirror. So if we want to use it right, we gotta get back to basics. We have to understand what this thing is actually telling us. What's its real job? The ADX is just a trend strength meter. That's it. It has one job and one job only, to tell you how much gas is in the tank of the current trend. It has zero opinion on whether the price is shooting for the moon or diving for the floor. It only cares about the raw power of the move. You've probably seen those other two lines that hang out with the ADX, right? The DMI plus and the DMI minus. Those are the guys that tell you about direction. Think of it like this. The DMI lines are your lead actors. One's the hero moving up, one's the villain moving down. But the ADX is the director, and it's just looking at the scene and telling you how much energy and intensity there is. So how do we actually read this thing? It's pretty simple. Generally, if that ADX line is just chillin' below 20 or 25, the market's kind of dead. It's choppy, it's sideways, it's not a great place to be a trend trader. But once it starts climbing past that 25 level, okay, now we're talking. That's the signal that a real, powerful trend is kicking into gear. Okay, so now that we get its job is all about strength, not direction, this is where the magic happens. This is the big aha moment for so many traders. This is how you unlock its real power. Here's the solution, and it's a huge mindset shift. Stop, just stop, trying to use the ADX as a trigger to buy or sell. It's not a go button. Instead, think of it like a bouncer at a club. Its only job is to check the ID of the market. Is this trend strong enough to even bother with, or should we just stay out? And when you start thinking of it this way, as a filter, the benefits just click. It saves you from getting chewed up in those horrible choppy markets where you just get stopped out over and over. It forces you to focus only on high probability setups. It's like a bodyguard for your main strategy. Your entry signal says, hey, I think we should go. And the ADX bodyguard steps in and says, hold on, let me check if it's safe first. Now, this all sounds good in theory, right? But does it actually work in the real world? Let's put it to the test and pair it up with another classic indicator that I'm sure you know, the RSI. See, RSI and ADX are like a perfect team. You know how RSI is great for spotting when a price might be getting a little stretched, a little overbought or oversold. That's useful, but in a monster trend, a stock can stay overbought for weeks. That's where our bodyguard, the ADX, steps in. It answers the critical follow-up question. Yeah, it's stretched, but is the trend behind it still a freight train? So check out the data. This is from a backtest on a natural gas shorting strategy. You can see the strategy using just the RSI. It's okay, not bad. But now look what happens when we tell the strategy, hey, you can only take a signal if the ADX is above 25. Wow, the profit factor jumps, the return to drawdown ratio gets way better. The ADX didn't find the trade, it just made sure we only took the best trades. But wait. There's one more layer to this, and honestly, this is the part that separates amateurs from pros. Why did that strategy work so well on natural gas specifically? This gets to the real secret of trading. And here is the absolute truth about indicators. They aren't magic. The ADX, RSI, moving averages, none of them create profitability out of thin air. What they do, what they're supposed to do, is help you see and take advantage of an edge that is already there, baked into the market itself. And here's the proof. We take that exact same strategy, the RSI signal with the ADX filter, and we run it on gold. We run it on the Aussie dollar, and it completely falls apart. It's a losing strategy. Why? Because the underlying edge wasn't there to begin with. Natural gas has a known historical tendency to trend hard to the downside. Gold and the Aussie dollar don't have that same personality. The filter couldn't save a bad idea. And this quote from Ali Casey over at StatOsis just nails it. ADX doesn't create edge. It protects it. That's it. That is the whole game right there. Its job is to take the edge you've already found and guard it. Okay, so that's the big idea.
how do we actually turn this into a process you can use, like, today? Well, we can boil it all down into a simple 5-step workflow.
Here we go. Step 1, and you cannot skip this. Find a real market edge first. Do your homework. Find a market with a verifiable tendency. Step 2, pick an entry signal designed to capture that specific edge. Then, step 3, bring in the bodyguard. Add the ADX filter, no trade unless the ADX is above 25, period. Finally, you test your exits. And then you can combine these robust strategies into a real portfolio. That's how you build something that can last.
Which brings us right back to the beginning, and it leaves you with the one question that truly matters. We know now that the ADX is an incredible tool for protecting your edge. So the real work, it isn't about learning another indicator. It's about answering this one simple question. What is your edge?